Okay, so supposing even the situation was not cautious, I mean the situation in Ukraine was still a bit of a stalemate, or was still risk adverse, or yielded risk adverse markets, we will make use of that wave 2. So it looks like we had a 1, 2, a 3, and a 4. The market was just doing a 5. Right now you find that it is doing a 5. At this point it was 1.2728. That 5 will terminate at the neckline, will terminate at the moving average. We get an ABC. If we get to see any of these levels today, it is possible you may wish to consider to buy 1/3. Again, going into the weekend on a risk adverse situation, you would diminish size. We would all diminish size. We're looking that if we get to see 2,530, we're looking here at especially 2,530, 35 should be seen. It's just the right shoulder. It's 50% of the current move. It's a buy at 1/3 size. All right, the stop, of course, stops do not operate at the weekend, so but we could get 2,420. We could get another head. We don't really have to be fearful of the position, so you would want to do an exact calculation of the risk involved. You could still test that head one more time. So it's something like $226 for one coin, and of course 1/3 comes in at something like $70. All right, so we buy this 2,530 if you think it is prudent, and after doing please your due diligence, our first target next week should be 138.2 and 161.8. 138.2 comes in at 2,880, showing here at 2,882. 161.8 comes in, of course, at 2,980 or 2,978. Let's take a look at the real market now. So this is the 1 hour chart that we're looking at. You can see we're about to break out into a degree 3. Into the degree 1, 2. So if on this momentum plot you find that there is a break above overbought, and this breaks above moving average neckline, we simply buy market, and it becomes very easily defined that we just have a risk, or would have a stop just below level 2 here, showing here, and below that level 5 showing here, which is 2,500. At that point we're buying close to 2,800 actually, so it's something like $300 per one coin here. If we get a correction, it would be a wave 2 as shown here. We would buy the lower boundary, that shoulder here. This is going to be again 2,535. Most appropriate is above level 1, and even that internal level 1. Let's check the internals now to see the feed. What kind of feed are we getting? Because this is what's going to determine if this is going to be moving higher or lower. So of course 50-minute chart is quite strong. It shows we're going to be moving higher. The 5 minutes shows we are already very strong and going to be moving higher. And the 1 minute, so we are really going to be moving higher, because all the feeds are very stable, very strong. The market is actually right now, and that's it. Usually opportunity would show up at the last moment, and sometimes inappropriate time. So it's the last moment this week, inappropriate time, because of course of the risk entailed. What could happen in Ukraine is fundamental. This would just reverse one more time, and we are where we have started. But anyway, this is business, and we have to take the risk if we're going to be making. Okay, so we expect this is trending today. This is Ethereum, and Bitcoin will be the same, but we're starting off with Ethereum. The market is a buy actual right away. The market right now at we think that, of course, everyone would have to do their own due diligence. From our perspective, we think the market is a buy at 2,715 with a stop just at 2,500. 2,500 is this level C here. We're a bit below the 1-2 formation. But if the market breaks below this 1-2 formation, then you know you're doing a wave 2, and you would want to get out if possible on a bounce. But most appropriate, if you're doing a wave 2, you would understand you need to have a stop below the entire formation, which is 2,300. So please work out the risk accordingly. we're buying 2,700, stop is 2,300, $400, 2,300, yes, $400 away, or $400 per coin. You may wish, of course, to go on a diminished size, either half or 1/3, so that if we get that retraction, even though we really don't think we're going to get that retraction, then we are not going to, we still have the potential to add. What we're seeing here is a head, and this is your shoulder. So to understand the coming pattern analysis that we are looking at, you could even get to take profits before the weekend if you wish. This is your head now, and this is our shoulder. So the market is moving up, and it will be, to get pattern equilibrium, you will probably be seeing this. So that neckline was probably this neckline, but we're looking at this neckline, 2,850. So whatever you're buying is $100, $120 profit at that 127.2 becomes actually wave 3, first leg wave 3, and 3 that is. Okay, it goes all the way there, and then it falls back again to do shoulders. You can see we have shoulders here, we have shoulders everywhere. On the left we have another shoulder here. Move all the way here, then we fall back to do these shoulders. Okay, at that way, and at that point we're getting pattern equilibrium. You're seeing a big head and two shoulders. You get now two shoulders, but you're first doing 2,850, maybe even 2,900 before you get. So we could consider to take profits there if we see these. If you see these before the weekend. If you don't see these, of course, before the weekend, we'll have to hold across the weekend and take the best that's possible. But we expect to see these next week. If we get to see these next week, we are looking for taking profits and buying back again at 2,700, maybe even lower, 2,620 to the right shoulder.